Okay, start webinar.
How's it going, everybody? Welcome to Scott Talks. I've been beginning everything, as you guys know, in a couple minutes. I'm gonna wait for a few people to jump on. It looks like we have a lot of attendees already joining. Just a little bit of quick housekeeping for Scott Talks. The Cam Strong is here to answer questions. We're both here to answer lots of questions for you guys. Just to kind of keep everybody under control and to make sure that no one's talking over each other. The Q&A or the chat box below is available for everyone to put up their remarks or their questions or anything like that. There will be quite a few things that we're covering on it right away. So I'm just going to give it another minute or so here just to get some more people on the attendees list. But it is good to see such a big list today. I think this is probably one of the more popular ones based on the fact that we have Cam Strong here to discuss some of the forecasts for what's happening in the near future. I'm just going to wait till it gets to about half here, guys. So. Okay, there we go. So we will have people streaming in as this goes on. This is being recorded today for the new and improved, I guess you could say, 2023 Scott Talks. Last year we started this off just in order to get some lenders across to discuss maybe some updates from inside stuff on marketing, things like that. Now, there came across my attention that those kind of things were getting a little bit long in the tooth. You guys get enough information from lenders. You get enough information from what goes out from our company here to you guys on a regular basis. So I implore you, please read your emails as they do arrive to you. That being said, this year we're going to switch it up. We're going to start adding some value from places where you may not hear stuff already from. Now, today we have some very great information coming to you. As we all know, the information is not always going to be nice. We are here probably to hear more about what to do next and how to make that happen. Within the last year, we've seen quite a few big pitfalls. There's been things that you guys have had to go through that have been pretty nasty. And, we've seen it's been some hard times across the country. So the whole point of this Scott Talks today was to bring on Cam Strong, who not only is an economist at nature in himself, but follows more than 30 to 40 economists at a time to understand where you'll see things happening in the future, where you're going to be able to maybe navigate around those things. And if there is nothing you can do about it, then he will tell you about that too. Cam is one of the most honest people that I've come to know in this industry. And when it comes to the information he provides, whether you like to hear it or not, he still will tell you the exact truth on what it's going to look like. So without further ado, we are going to be listening to more of what Cam has to do. He's going to be going through, a bit of the stuff that's been happening so far, what he can forecast for the 22-24 markets, and this one part of the segment that I think will have the most amount of information that you guys will take away from is 5 steps on how to survive in 2023, which is what we're coming into right now. So without further ado, I'll let Cam Strong come on to the call right now and introduce and get things started.
Thanks for that warm introduction, Scott. And you and I were talking earlier about when I was studying for my CA stuff and learning about taxes. You were telling me you were studying parallelograms instead of how to do your taxes. So it's really going to come in handy when it's parallelogram season, isn't it, Scott?
So, it's good you're starting off with a joke, Cam. Not only are you a CAO, but I guess you're moonlighting as a stand-up comic from now on, eh? Well, and just to introduce you a little further to Cam as well, with not only being a stand-up comic as well as a CEO. He's had 22 years here at Invis MI. He is a CA and a CPA on the background, not only just on the liability side of the business knowledge, but also in-depth investment knowledge as well. So you can see his blogs all over the place, and we are going to be putting his blogs up in the chat for you guys to take a look at. I implore you to take a look at those blogs. We will mention them a few times, as well as read a sneak peek into one coming up. But just to get things started, I will start off with, after that wonderful joke, Cam, thanks so much. You've been saying for a long time, Cam, that in 2023, it's a year of survival for the mortgage broker. Can you elaborate on that for us right away?
Yeah, so 2023, there's no question it's going to be a tough market for us mortgage brokers. But I have great news for 2024 and 2025. They are going to be just fantastic years for us. And you heard it first here, Scott.
Yeah.
And, just take a look at my headline for tomorrow. It's all doom and gloom, and it's a short article I've already written for the Bank of Canada announcement that will come out tomorrow. It does spell out how difficult 2023 will be. But at the end of it, I think I've got some great news for you.
Well, I think I'm going to read a little segment off the bat here, guys. We will have this article will be coming out tomorrow, and this is forecasting today. So please keep in mind that it is for tomorrow. Okay. So Cam's article reads, the Bank of Canada raises an 8th time its overnight rate to 4.5 today. With the unemployment rate at 5% in Canada and inflation at 6.3%, the Bank of Canada did not hesitate to raise the overnight rate today by a quarter percentage to 4.5%. Now, before I go on, Cam, what makes you think that they're going to be raising it a quarter percentage at this time?
So I do, like as you mentioned at the top, I do have access to a lot of economists. The consensus for most economists is that they will still go a quarter point because inflation is still their number one mandate to get that under control and reduce that, at least domestically. But all the G7 countries are lining up to try and reduce inflation. So I expect rate increases in the US and elsewhere as well. So that is the consensus among the economists I speak to. I'm very fortunate to be able to tap into that, but it's not, there are some outliers who are saying there'll be no increase, that the Bank of Canada has done enough and there won't be an increase. So if that's the case tomorrow, then I guess I have to eat my words and I'll adjust my plan tomorrow.
Well, I mean, and according to this as well too, Cam, so I'll continue on with the article, guys, here. This is, again, coming from Cam's article. According to the head of the International Monetary Fund, 2023 will be a tough year, tougher than one we leave behind. Kristalina Georgieva, managing director of the IMF, said recently in an interview and that she expects 1/3 of the world economy will be in recession by the end of the second half of this year. She warned the world's 3 leading economies, the United States, European Union, and China, are all slowing at the same time. Now, this recession, expected in the second half of 2023 and not long in duration or severity, will be caused by rapidly raising interest rates by the central banks in the G7 countries, designed to reduce inflation by pushing up borrowing costs, thereby crippling household and business spending. There is no indication the US Federal Reserve or the Bank of Canada and the other central banks will ease up until there are clear indications that the rate of inflation is moving toward a 2% target. Now, that comes from Cam's article tomorrow, guys. So I do, sorry if I had my eyes down reading it, but I wanted to make sure I covered that directly, Cam, because it sounds like even if there isn't a raise tomorrow, there still will be a recession. Can you comment a little more on that?
Yeah, so that's all the doom and gloom for 2023. But here's the good news, Scott. At the end of a mild recession, which I expect to be short, let's say it ends early 2024, Bank of Canada would be expected to reduce overnight rates and to spur basically the general economy. It's not directed at the housing economy, it's for the general economy. This will have a dramatic effect on real estate activity and us mortgage brokers. And that, coupled with all that pent-up demand that's out there, you've got falling interest rates, massive immigration to Canada at 500,000 to 600,000 people a year, which increases demand for housing. And we've had a severe undersupply of housing stock. So that works in our favor as mortgage brokers. So the social cost of that is not so great. And just on that last point, Canada does have a severe shortage of construction workers and housing stock. And if you don't believe me, look at the recent CMHC Stats Canada Build Force stats. They're terrible. But 2024, 2025, we're going to have what I call feast years for mortgage brokers. We're going to have a great, just robust activity in the real estate markets.
Wonderful. That's great for that insight. Although as dark as it may seem, guys, it is great.
Dark for this year, but great for
But
the
yeah,
next.
but also good indications for mortgage brokers, as you said, guys. There's going to be a lot of work coming up for you guys. It's going to feel like a year previous, just previous to this one, I'm sure. But I guess after that, you guys will be ready for anything. So, Cam, on to a next point here. I know you have a lot of investment knowledge, as well as you can comment on the investment side of stocks and bonds in 2023 and beyond. Can you comment on those for us, please?
Yeah, sure. I'll speak just briefly on that because not everyone's interested in the investment stuff. But stock prices tend to fall in a recession, Scott, and that's because corporate earnings decline. Households are constrained, and corporate earnings slow because of economic activity slowing. So, and they also have rising costs. They've got wage cost demands, et cetera, hitting them. So their earnings tend to fall, and that brings stocks down as well. Plus, investment advisors right now are generally guiding their clients into fixed income products, GICs and corporate bonds and other types of bonds, government bonds, et cetera, to at least give them a positive yield in 2023. But if you're like me, you wait and you let the stocks all drop, and then it's a great buying opportunity in 2023. So for me personally, I really am attracted to stock buying, particularly dividend stocks. So I'll wait for them to become really cheap later in the year, and then I'm going to buy a lot of them, right? Also, gold is an interesting and complex market. I could see new highs in 2023 and 2024. And keep an eye on, if you're into gold, keep an eye on foreign central bank buying of gold. There's many companies that are seeking an alternative means of trade to the US. So just keep an eye on that in your portfolios, okay?
Thanks. Well, I'm glad we could touch on that at least a little bit, because I know people are probably questioning a bit of the investment side that's going to be happening in the next little while. So this is one of the topics that was probably the most interesting part for us to be here all as mortgage brokers on this call. How do you think that we're going to be able to survive as a broker in 2023? And do you have any practical advice for the brokers on what they should do going forward for this year?
So, yeah, I mean, I have 5 really, I think, basic points that I want to cover, but I just want to, before I even do that, I want to talk about, what it will look like in 2023. So you've got home sales, home prices down, except in Atlantic Canada and parts of Alberta. Home prices will still be above pre-pandemic levels, obviously, but with all this less activity for both real estate agents and mortgage brokers, Scott, the one thing you get back, and that's very positive, is a lot more time. And that time is really important. So
what are you suggesting people do with all this time towards their clients, towards anything like that going forward?
Well, I think, again, before I get into the 5 steps that I think you can use your time for, remember your clients have rising credit card debt. They've got lower home prices, there's stock losses in 2022, and maybe some more losses in 2023 if they don't switch their portfolios out to something, that will give them a return. So they're very constrained, and they know, because they see all the press headlines, that they're heading into a recession, right?
Right.
So market downturns are a really good time to use your time as the local financial expert to deepen your relationship with your existing clients. Let's help them not make emotional decisions. You can educate them about what the markets they're heading into, that the market's not going to stay down forever. There's lots of things that you can talk to them about, both on the real estate side, the mortgage side, and the investment side, right? I mean, they're concerned. I mean, I've shown you stats. You've seen the stats, Scott. People are losing sleep, like 50% of Canadians losing sleep over money. You have to be their trusted source of financial information. So my first thing would be touch base with past, present, and future clients, and do it by voice or Zoom. They can hear your reassurance in your voice that everything's going to be okay, even though it's going to be a tough 23. Voice modulation conveys a lot more than word, email, or text, right? I mean, obviously you can, convey stuff through text and social media and everything else, but voice is great, right? And remember, you're the trusted local financial expert for them. You are the person that they relied on to put them in the house in the first place, you need to provide them with some advice and try to go beyond the mortgage with that advice. Don't just talk about their mortgage, talk a lot more holistically about their whole financial situation if you can.
And just before you go on there, Cam, on to the second point, I believe that that is one of the blogs that you wrote as well too. Just don't just shop for a mortgage rate. I believe there are so many things that matter other than just rates. Now, reading into these blogs again, Cam's asked me to touch on because they do have a lot of the information that Cam's purveying right now, or things that he's said in the past. Now, this will provide you with some helpful advice to mortgage brokers and the consumer about services beyond the mortgage a broker can provide. Now, those can be such as, ensuring your client is created and is following a budget as we head into a recession to improve household cash flow, and also that their high interest debt is consolidated into the mortgage. Now, that's just some of the amazing points that Cam has made in his blog that he's written out before. Cam, is there anything else in that blog that you might want to touch on before we go on to the second point?
No, I think you covered it pretty well. Thanks for reading my blog.
Someone has to.
So my second point, really with the time, make sure your processes are in good shape. And what I mean by that is you're gonna, I've just said you've got this big positive 2024, 2025 coming, with this big demand coming there. It's coming from a lot of sources, as I mentioned. It's coming from all the immigration we have coming in. We have the existing Gen Zs and millennials who really want to have a home ownership, right? So make sure you're using third-party portals for document loading. Your NOA retrieval and bank statement from third parties is up to speed, just as examples. And make sure your team is comfortable using all this stuff while you've got the time. The other thing I would recommend even, and it's a small thing, but get your Equifax certification. If you have the time, go get it. It's a differentiator,
Yeah, big time.
My third point is contact Brian Hutton as marketing partner to build a stronger social media presence, right? I mentioned voice, but also social media is extremely important, right? It's the cheapest way of advertising to a lot of people. You can't possibly advertise as much as the banks advertise, obviously, or others in the marketplace. So you got to use social media. And the goal would be to penetrate and obtain new market share from financial institutions. That would be the goal. Not from necessarily fellow brokers, but go there. So I see a question from Elaine Simpson. Yes, we are. I'm going to get into that in just a minute, Elaine. Just give me a second.
And guys, just so you know too, if there's any questions that come up as well, we can answer them at the end. Cam likes to jump in them right away, but he wants to stay on track too. So
no, sorry, it just caught my eye because yes, we are going to give that advice. So
thank you, Ross.
So don't give up on sales. So my fourth point would be don't give up on sales entirely. Be creative with first-time home buyers. And there's a number of ways you can do that. You can do all the math. And I've done the math for even some of my friends and neighbors. You can show home decreases on Ontario and BC. You can't do this for Alberta and Atlantic Canada because you've got this same scenario. But in Ontario and BC, you may have, depending on the neighborhood, some severity of decreases that you're targeting to live in. And even with the rise in mortgage rates, it makes sense to get in there. So do the math and show your clients. You may be able to get a first-time home buyer into that market. Also, I did a blog on co-investing with relatives. It's not as easy as it sounds. You do have to craft legals. You have to make sure your relatives are solid people, etc. There is a blog on this. Have a look at that. Choosing longer amortization periods. Also, the other side of that, I'm talking about first-time home buyers right now. So let's not get into others refining. Encourage them to purchase in smaller communities, I've mentioned before, or, we saw this massive exodus of young families leave Ontario and BC and go to Alberta and Atlantic Canada. If you've got the type of job that lends itself to that, like if you're working from home, that type of thing. Let's face it, 50% of Canadians can work at home. You may have the type of job that lends itself to that, and you can go to a different community. And remember, interprovincial deals at Invis Mortgage Intelligence, we can help you with that, right?
Yep, that's right. We're going to talk about that at the end as well too. There is that new Access Desk Hub that everyone's probably seen come out now.
Yeah. And tap into the mom and dad more heavily if you have to for time home buyer. Have them co-sign. This is a very popular option amongst a lot of our brokers. But don't put the parents in a financially precarious position to help their kids. I mean, we've seen that a lot in our practice where the parents are guilted into giving too much, and that's that's creating its own problems, right? And then they're having to go to reverse mortgages and stuff and things like that, and getting into heavy HELOC costs, etc. So be careful with that, tapping into that. The last thing is using your home as rental. Now, the last point I want to make is, and this is the fifth point, expand your network of referral sources. If you've been meeting to go down the street and, touch base with your local financial planner or new real estate lawyer in your community or local CPA, do it. You've got the time in 2023, you'll have more time. Expand your referral sources. That's always a good one as well. So I think we're pretty close to being able to answer some questions.
So yeah, let's answer some questions first, Cam, then I'll do some closing remarks with you quickly.
Okay, sure.
We'll have some stuff to do, because right off the bat here, there's one in the Q&A that we issue with the T4s through Snap NOI, not showing the clients. We will definitely take a look at that for you, Jacqueline. And I'm sure it is being looked at into or fixed. I'll definitely update you specifically on that. First of all, we'll start up with Sharon. Will the new rules not affect the immigrant purchases? Have lender pulling a deal signed last year, closing at the end of the month? So she has a current deal right now closing at the end of the month. Are the new rules going to affect immigrant purchases, is her question.
So yeah, it depends where they are in the process, right? Because those rules came in January 1. So if that deal was already in the works, it probably would not affect them. They would probably be okay. Like if it was started further enough along. They need to just check with their local, with whoever they're doing the deal with at the financial side. But I suspect it'll be okay. I mean, it's tough for them. It's going to be tough for the government to police that stuff, if you think about it, right? Yeah. Fine is $10,000, right?
Yeah.
Max. It's going to be pretty tough to police that. I don't see a lot of too many people getting caught in that. And if people are smart enough, they can easily get around those rules, right?
Right. Now, Elaine's asking again, and I think, did you already answer this one?
No, I want to answer it.
Okay.
So
are you recommending?
I saw her question pop up. Yeah.
Yeah. Are you recommending clients take short term based on the rates potentially dropping in 2023 and 2024? So
yes, I do recommend that you take a 2-year, or and they're kicking around. They're obviously above the 5 years right now, the 2 years. And I think the difference is about 80 basis points right now. But also look at variable, take a variable, because if rates come down in 2024, I'm not expecting them to come down in 23. I'm expecting them to actually start coming down in 24 and substantially in 25. You want to, variable could be very attractive as well, if they're willing to take the risk. And because right now you get prime -1 on the variable, which is still not great given where prime is, but it could be substantially better than taking that 5-year fix. So I wouldn't put anybody into a 5-year fixed. I would be putting them into 2-year fixed or a variable, 5-year variable, so that they can take advantage of rates coming down when they do come down, right? Even though it's going to hurt them obviously for a year more or so, right? Yeah, perfect. And then Debbie wrote in here as well too, just to reiterate, as per the new immigrant file, if the offer to purchase is dated prior to 1/1/2023, it will close. So that's a nice. I think so. Yeah, I think that's what I've been told, that they won't go after that. It depends. Again, you need to consult with your real estate lawyer and the financial institution, because they're the ones supposed to be policing this stuff. We will also be looking at it in our compliance department, but we're not being instructed by the government on this at all. I think the policing will be quite weak on this stuff. Clearly, if you're doing a transaction, it's not even started after January 1st with a foreign buyer, you're going to have a problem, right? So. So Paul Williams says, any new lender partners we can expect to get access to in 2023? That's a good question, Paul. Cam, you got any secrets for us? There is a large charter bank. I can tell you this, there's a large charter bank we are working on to come into the marketplace, but they're not expected in 2023. You saw how long it took National Bank to come in. Quebec had it for almost 3 years before even Ontario got it, and we're still trying to expand it to Western Canada in 23 or in 24. So the charter banks do take quite a bit of time to come in. And they're watching the National Bank experiment quite closely. But there is interest from other charter banks. I know of one that definitely wants to come in. But it's not,
Sorry.
no, I can't give you any hints. I mean, what chartered banks are in the space now?
You can give me a call after, Sweet. I'll give you a guess on a color. You can
There's only a few left, right? So yeah, we are talking to them, but it looks to me like it would be 24 before one would bite. Okay.
Okay, listen, all right, we're gonna have to start censoring this chat.
There's only three that you could possibly guess, right? So,
I guess you're right. It's an easy chip, easy guess.
It's one of them definitely pushing to come back. And I know why they want to come back. They've just lost too much market share.
We're gonna have to cut John off in a minute.
It's just not enough. All right.
So Kevin, you're saying around 2025 is when things are going to start picking up pretty aggressively for a broker.
I think 24 and 25 will be great years again for, they'll look like 2020 and 2021. I think just flipped, 20, it'll look like 21 for 24 and then 2020 for 25. That's all. Because rates will be coming down. You've got all that demand. I mean, demand is heavy. I mean, that's sitting out there waiting to come into the market. They're just waiting for rates to drop. They're waiting for a recession that's basically manufactured by the G7 countries to be over, and then rates to drop, because you got to put your economy back together once you've destroyed it.
Seller's market.
Interest rates.
It's going to stay a seller's market.
Decimated the whole thing. You've got to put it back together, and it's not aimed at the housing market. It's aimed at just getting the economy back to some growth again, right? Because it'll be zero growth. Like, it's going to be negative growth in recession, right? That's the definition of a recession. The one thing I worry about, though, about that is if they raise rates a lot, you kill your economy and you do not get inflation down, because inflation, let's face it, is half of it's domestic, half of it's foreign. So then you end up with stagflation. That's going to be the worst thing. You still got this inflation hanging around, and then you've got high interest rates in a bad economy. That's the way Japan went, and has continued to go, and it's not a good place to be. So that is my one big all of this.
Perfect. So we got one from Chris Golding. Always a good question here. So do you expect default rates to increase significantly during the high interest rate period?
Significantly? No, not at all.
Okay.
I mean, you might see more market activity with people actually being forced to sell their homes out, but so you might see a bit of flurry this spring, for example, as people know that they really can't afford the home they're in. They're going to have to dump it, right? So you might see a bit of that, but I'm not expecting a lot of market activity. No one is. In fact, I sat through Korea seminar just a few days ago. I sat through a couple of, Remax and Royal LePage seminars as well, and I've got another one coming up, and they're all forecasting the same thing. Low sales and lower prices in 2023. So only those people forced to sell, but not necessarily defaulting. People will take other jobs. The default rate's still quite low right now. I just checked the stats, which were up to December. So, but I'll keep an eye on that for you. I'll keep an eye.
Perfect. Thanks, Kim. Is there any other questions, guys, before I go to Jean Lamar? Okay, we have a comment here. Report yesterday about fraud capital. Hold on a second, I'll open it up here. Report yesterday about fraud capital on people's homes being sold without their knowledge. Title covers this. This is cord that and every mortgage has title ins. I think I read that as well too. That was
get title insurance. Yes, get title insurance, and try to live in your house once in a while. All these people were out of their homes for like a year or 6 months or whatever. Like,
it's
keep
gone.
it out of your house. Jeez,
check on
because these people had to gain access to your home, change all the locks, right? Impersonate you, get all your ID. Like, live in your house once in a while. Like, don't be a stranger. These people are all away for like 6 months or a year, in some cases 2 years. That's who got hit. Now the cases in at least in Ontario were like 60. There's been like 60 cases in Ontario that I'm aware of. And it all looks pretty similar in nature. Like, people were absent from these homes for an extended period of time. Don't be that absent. you know, or have someone check in on your,
Water your plants. That's it.
because they had to change all the locks, and they had to stage it, and they had to remove your cars, and they had to do a lot of stuff. So you had to be away for a long time
That's
for them to stage this house for
Yeah,
sale.
that is
Right? So
pretty wild situation.
they had to move your cars out too, and rearrange your furniture and everything. So, you know,
950,000 in some cases though,
And-
so they look like it was worth it.
title insurance is not a panacea. It's still very difficult to get your money back through that. You know, it's not a panacea. It's like our E&O. It's not, does not always cover every situation.
Yeah, perfect. So guys, if there's any more questions here quickly, or I'm just, you can actually orchestrate those right away, right now, but I'm gonna end off with one more question to you, Cam.
No, go ahead.
And it's just a personal question. It's just gonna see, and it's for everyone. And I hate to make this, negative at the end or anything like that, but it's best that we tackle these situations before we're unaware that they're gonna happen. So what is keeping you up at night right now, Cam? What's the one thing that you're worried about the most going forward?
So I have four children, as you probably all know.
How many
And
grandkids?
one grandkid. And I know it for young people, it's really tough to afford a home, obviously, and especially in our largest cities, forget it, right? And our largest cities, you know, they're stuck in gridlock. You know, I travel on the roads enough. I got to take 407 here in Ontario because it's so bad. We got hospitals overcrowded. If you've ever been to a hospital lately, it's pretty bad. And we got, lack of infrastructure for what we're trying to achieve. We're trying to achieve 50 million people in Canada in the next 20 years. We're trying to get to that goal. And that means that 500 to 600,000 people come in per year. I would say good luck finding enough tradespeople to know how to actually build that housing. We're not targeting that in our immigration policies. I did ask the parliamentary secretary for housing that very question last week, and she didn't know what they're doing in immigration because it's not her file, right? So under best case scenario, I was looking at the CMHC stuff. I'm just trying to open it up right now on my computer. Housing starts in Ontario, Quebec, BC will only be half what we need this year and years going forward. And plus we got aging population, right? So in 20 years, I think I threw out the stat before, we have 1/4 of Canada's population will be over 65. That's going to place more demand on our medical system, which is already people are screaming about. We had that poor lady out in Nova Scotia who passed away waiting for help in the hospital, if you recall, a terrible situation.
Horrible.
And that also, because people are living longer and it's stress on OAS. Remember OAS, which if you don't know is a supplement that you get at 65. It comes out of general tax revenues. It's not like CPP for it's provided for, right? So we're going to have bottom line, like what keeps me up at night to answer your question. I know it's a long-winded way. 20 years from now, we're going to live in a world with fewer services and higher taxes, and still we'll have this housing shortage. That's what keeps me up at night. Now, the good news, as I said before, for the mortgage broker, that could be good, right? You have a lot of market activity. You got this housing shortage, larger mortgage sizes down the road as we go through this, because prices will just keep going up and they'll need to keep interest rates fairly low worldwide to keep spurring economies. But I see with aging population and our immigration policy that we'll have fewer services and higher taxes in 20 years. That's what I see. And we'll still have in 20 years, we'll still be talking about this housing shortage we have is what I think will happen. Okay. Unless by some miracle we import 5 million guys to build and women to build homes, unless we get a lot of people. We'll be short 3 million tradespeople in 20 years to build this stuff, right? Is what they're estimating. So
something good to follow. It's not all great on this conversational call today, but that's something to very much be aware of too. We can't turn a blind eye to this kind of stuff that's going to be happening in the future. So if there's any more questions, guys, I definitely have some time to answer them from Cam right now. But if not, then I just wanted to say Cam, thank you so much for coming on to the first session of the year. Guys, as I said before, we will be adding some more content to this that will actually be useful to help you survive this year. Cam being the first one, we're going to use this theme for the rest of the year of how to keep surviving, how to make the changes in your business. We're going to add some sales tips and stuff like that too. There's also going to be some great events coming up this year to keep an eye out for in Eastern Canada as well as the rest of Canada too. So we are going to be definitely touching base with a lot of great stuff this year coming forward. Guys, Cam, thank you so much again. Is there anything else you want to leave us with, Cam, or are you all talked out now after all that?
I love the fact that you guys are going to have a lot of time in 2023. I mean, I know it's tough. You got to survive because you got to, you eat what you kill. But
Yeah.
I think with the time, you could do a lot of good for yourself and really improve your processes and marketings and all the other stuff that you do. And I really believe that you got to touch base with all your clients and all the ones that you're prospecting. You really have to reach out to them. Be more than just a broker that's talking about the mortgage. Be more than that for them. Is really important. I hear that a lot. And one of the accolades we get as mortgage brokers at Invis and Mortgage Intelligence is we do have that depth. We have a lot more depth than many other brokers. So I think we're very unique and special in that way.
Perfect.
Thanks, Scott.
Okay, guys.
I really appreciate you bringing me on.
No, for sure. Thanks for coming on. It was a great one to start the year off, and I look forward to. I mean, it's all downhill from here, guys. So Cam was the best one, I assume. Nothing better. So
thanks a lot. Thanks for everyone for being on the call today. Appreciate it.
Thank you so much, guys. Have a great day, and I look forward to seeing you guys in a couple of weeks for the next session. Okay.
Thanks everyone.
Guys. Bye bye.